everybody? What's happening? What's up? I landed on my shin, kinda awkwardly. I fell on the ice earlier. Yep, good to see everybody. Today is Thursday, January 4th. Should be live on the YouTube, live in the virtual trading floor. Cool. Let's jump in. I am an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. The position disclosure, I didn't get rid of anything. I added on a very small amount of Apple and a not super small amount of Peloton, which was a pretty good trade today. Not necessarily easy. I don't know. Today was kind of a whatever trading session. I had some solid expectations that we could look for a bounce today that really didn't happen. There were some decent trades to the long side off the open, but this market really couldn't clear or hold above any major levels. We did get above that SPY 470 for a bit at one point during the day. The IWM never participated. The IWM was super anemic. And the Qs worked their way back up to 400, which was an important level yesterday. Couldn't get through it. Barely even spent any time green today. And then everything rolled over into the close and closed on lows. So, not really a great trading session. I think that there were a few good trades again off the open. And I really can't complain. You know, I got pretty heavily long at one point this morning, and the market closed red, and I closed with decent positive P&L, so I can't complain too much. But definitely didn't get the type of upside follow-through I was looking for on a potential pivot on a day 4 down. You know, the SPYs opened up right at or a little bit above yesterday's low, but the Qs and the IWM gapped down below yesterday's low. So it's a day 4 gap down within the confines of an uptrend. It's really the space on the big picture where I would expect bulls to take a stand. And I don't know, the buying was not great. It more seemed like the sellers took a pause on their recent profit-taking rotation trade that had been ongoing for the last several trading sessions. It more seemed like the sellers took a pause than buyers actually came in to attempt to defend the market. So it's starting to become a little bit concerning if we don't get a bounce relatively soon, that we are spending too much time below these shorter term moving averages on the daily chart that can eventually roll them down and have them cross. The QQQ here is starting to look pretty precarious with that 80 EMA pointing down. The slope of the 21 EMA had flattened out and is almost starting to point down, and they might even cross at a certain point. The IWM did that full gap fill that we were looking for into that 193 and change area, and basically just sat at some support pretty much all day. Could not bounce at all after 5% plus move lower from highs. Just sat at support, couldn't even bounce off support. It's really not the price action that you want to see if you are looking for the higher low to come into the market, to be totally honest. I think that the VVIX did stay weak today. That's one thing that Pat was talking about into the close. I do think that is notable. One thing I was reading in one of the notes this morning that I read, I don't remember if it was Pat's note or if it was Charlie's note, about keeping an eye on VVIX. If it works its way up to $100, could become more of a real problem for the market. So seeing that weakness could be supportive for markets to some degree, but again, there was no bounce to speak of. We've got an important jobs number tomorrow at 8:30 that's probably going to dictate the direction of price action kind of going forward at this point. So I think we're in a little bit of a wait and see mode until we get through the number tomorrow morning, 8:30 Eastern. But until then, day four gap down. I still would expect that even if this market really is developing some sort of trend reversal, that a actual trend reversal pattern will come in. I don't see us going straight down to SPY 460 without there being some sort of bounce first, unless tomorrow's number is a disaster. I don't see us going straight down to like SPY 460 or QQQ 390 without there being at least some attempt at a bounce somewhere. But today's price action is really not great. I would liken it more as a bearish consolidation day than anything, where we closed on lows. So definitely not great for technical bulls here who are looking for that bounce trade to come in. I still think that it was 100% the right idea to look on the long side of the market from a risk reward and probability of success perspective off the open this morning into that day four gap down in an uptrending market. And again, mixed success, I think, on those trades, but there were certainly some good ones out there. It seemed like some of the best ones were actually in some growth stocks that have gotten sold down pretty hard, like Shopify off the open is kind of that RDR. Like there's a whole bunch of these growth type names that look pretty solid with how they traded early on, back through the previous day's low. That long versus the opening low gave pretty good follow through for like a Shopify. Like Unity was okay. Snap, I guess, never actually broke yesterday's low, but that's one that I remember as being kind of strong this morning. But there were others that were just a total disappointment. Google, maybe not terrible immediately off the open, but that sell-off in Google into the afternoon, given that it was the most relatively strong of big cap tech yesterday, was just atrocious. So maybe you could have taken a break-even trade or made a couple dollars in a long trade off the open, because that opening low didn't get breached for a while and there was an okay pop there. But we never broke the I was gonna say we never broke the inside day to the upside. Google actually didn't have an inside day. Microsoft had the inside day. Microsoft was never able to quite break the inside day to the upside, so the daily picture of it never triggered. I understand it, that a few traders, like Rex as an example, were trying to get a jump start on the break of that inside day, and I can't hate on that. But the market just failed to give us any real follow through. These trades failed to give any real follow through. Meta is similar, had that inside day on the daily chart. This actually did tick above yesterday's high by a little bit, but it's like 1:30 in the afternoon. That's not really where I would want to execute the inside and up type of trade. But that was my thought process coming into today. Day four gap down. Let's look for RDRs or names that had inside days yesterday, meaning that they were relatively strong. Spotify, I think, was another one with an inside day yesterday that actually broke up and was decent. Let's look for those names to see if the market can attempt to give a pivot. And again, I think it was the right thought process. Some of those trades actually worked decently well. Some of them worked okay enough where you should have been able to cover your risk. But the fact of the matter is, this market didn't give us anything to enable those trades to be, tremendously successful. So you always got to manage your risk, and that's why I'm a big proponent of, when you put that trade on, get your risk covered. So if the trade fails, because trades fail all the time, ideas fail all the time, that at a minimum you're not getting hurt. So while I would describe today's price action as disappointing, I don't think that it was price action where anyone should have gotten hurt by trying to buy things early on in the day, unless you happen to be buying something that was super relatively weak. As far as a focus for me, the focus for me today was position management for the things that I have open, but it was Peloton, Nvidia, Apple. I started a new position in, but it was small. Talk about Peloton first, I guess. Peloton had that TikTok news come out this morning, and I thought that news was really significant. This also, honestly, even though it traded well by the end of the day, you had to be super patient on that trade. It's really not the action that I was looking for. And I feel like we don't see that as much anymore. Like, that action I'm looking for, and we used to see it a lot, I don't know, years ago, and I'm sure we'll see it again, and we see it in certain market environments, is like, you gap up a bit on some news, and then that news, the second the market hits, everyone starts rushing to buy at the same time, and you get that incredible upside momentum on the trade. I just haven't seen as much of that these days, and there's a number of reasons that can contribute to that. Even 2023, which was a very bullish year just on percentage statistics for what the S&P and the Nasdaq did. Even in a year that was as bullish on a percentage basis as 2023 was, I feel like you still don't see a ton of that opening massive upside momentum, maybe a little bit on certain earnings reports. So this Peloton, while it turned out to be a pretty good trade, was certainly tricky. I spoke about being long versus the 560 area. First candle of the day, the low is 560. It bounces off that decently, actually. I think all the way up to this high of 579. So I was buying, was able to sell a little bit on the way up, and then on the very next candle, it actually pierced that low. The ADMA hadn't caught up to that low, so I wasn't using it as a stop loss yet. I always want that ADMA to give confirmation of the pivot. So I didn't actually get stopped out, but I could see that anyone who was going for pure momentum, and this is why I'm saying that these trades have become a little bit trickier than they used to be, could have gotten shaken out of their position on the second 5-minute candle when that 560 low actually broke. I didn't. I was able to maintain my full position, and my full position had some size. So, caught the move into $6, just sat tight and was patient throughout the entirety of this consolidation. We discussed that 590 was acting as some resistance. I was able to see that 590 had a lot of selling even the first time it tested it, and it broke through and went to 97 cents. 590 was also some resistance even in the pre-market, and then finally they cleared up through that 590 at about 1 o'clock, gave us a little bit better follow-through up to 630. So even this trade, and it's my second best name of the day, wasn't necessarily, super easy. You had to be, pretty patient there, and be patient with the stop loss, be able to give some, kind of wider space with it, and then be patient to get the upside continuation on it. So that was okay. Nvidia was also a big focus for me. This one was also, I would say, just okay. There are points in the day today where this Nvidia was showing a lot of relative strength. It was showing relative strength compared to the other semis pre-market. And I don't know. I was using still yesterday's pre-market low actually as my stop loss, and I added at 476 a couple of times today, which ended up paying me. But this break lows, I know Brant, if he's here, was involved in this trade using kind of lows to try to go after this balance on some of the strength the stock was showing. This break lows before the snap up was just a brutal shakeout of like intraday stop losses before the continuation occurred. So this is actually my best name on the day today because I was giving it some wide room and I was adding it 476 on a couple occasions, including pre-market and selling some into the pops. But I wouldn't necessarily describe this as easy trading either. The best trades that were out there were some of those Shopify type trades that gave that early morning RDR and actually gave the upside follow through. So in sum, I guess just to repeat myself, I would describe today as just kind of a disappointing trading session. I think that the trades were there in the beginning of the day. Some of them were decently good, profitable trades. A lot of them were tricky, but maybe if you executed well enough, gave you the opportunity to at least cover your risk before the trades failed. But the fact of the matter is that the market just did not give us a pivot low like I was, looking for to see if it could come into the market today. It just did not give that pivot low, and it, closed on lows. So therefore, even some of these ones that were trading a little bit better, like Nvidia, which I just showed, struggled to really give any major upside follow through. And it just kind of is what it is. All we can do is put ourselves in a position to be able to make money from a risk reward and probability of success perspective. And a lot of times it'll work out well, and other times it won't, and you'll lose your risk. And if you manage your risk well, again, just to repeat myself, I think with a lot of those trades, if you manage your risk well, at the end of the day, it's kind of a no gain, no loss type of situation. This is pretty much all I got. I dabbled on very small Apple also, which I'm keeping. Just prices around 182-ish, but I was able to book some profit trading it intraday. So I'm up a little bit on it, and I'm just going to keep the position to see if I can get a little bit more of an oversold bounce from this thing. It very quickly has worked its way back back down almost to the 200-day. It's really extended on the daily chart. And I just thought that the downgrade in Apple this morning was kind of a joke. Downgraded to neutral with a $205 price target brings the stock down by 1.5% or 1.25% or whatever. Just kind of a joke. So I kept it a little bit. That's all I got. I'm happy to answer any questions, review any comments. So from Bill here, just to say it, systematic CTAs and vol scaling have a lot of exposure, and if we get larger vol returns than we've had, then we should see selling flows from systematics. Not expecting a timetable on that, but I'm personally watching for some outsized volatility to start the dominoes. Thanks for that, Bill. It's a really important commentary. Something I'm definitely paying attention to also is just the price of the VIX, paying attention to VVIX. I'm not sure if you know. I'd be curious to see it. We know that like the CTAs, as an example, took on a tremendous amount of exposure over the course of November, December. And I think that some of the numbers I saw showed that there's a lot of exposure if you're looking at like a 1 or 2 year look back, but maybe not necessarily a lot of exposure if you're looking at like a 5 to 10 year look back on a percentage basis. So definitely something I'm paying attention to also, and the VIX is something we need to be paying a close eye to, because for sure, while I don't think that we have hit a point personally where the positioning has gotten like as extreme, at least on what I've seen or how I've tried to analyze the data, as extreme as it was kind of at that July high. There's definitely room for some real selling to come into the market should we see an uptick in the VIX. So it's something we got to keep an eye on. I don't know where the VIX closed today, but I'm pretty sure we ticked above 14 again today for the first time in a while. But I think Pat was also mentioning that VVIX closed a little bit weaker today. 14.13. Is that the high of the day, or is that where we closed? I do think it ticked back above 14 there, significant when we were just at a 12 handle. So thanks. 14.13 was the close. Thanks. Thanks, Bill. From Cameron, how often do you see those kinds of afternoon breakouts? How often? I'm not sure I have a great answer for you on it, and I don't want to just make something up. I want to say not that often, but it could be that it's more often than I think, and it's just not something that I look for. I've generally always been more of an off-the-open trader. I think that traders who are like me, who are more off-the-open traders, have had to do some real adjustments over the course of the last year plus. And this is something we spent a lot of time talking about, just with how the onset of zero DTEs has just kind of affected the profile of the market and how it trades, where I've seen that. I feel like a lot of traders who in some ways trade similar to me, who like to do kind of what I did in Peloton today, which is just take a lot of size really early and look for the momentum to come in, have actually really struggled for the last couple of years, because what ends up happening, I think, in this environment now is even when their ideas are right, there's enough weakness a lot of times in the beginning of the day that pushes them out of their ideas, because they're taking so much size so early off the open, and therefore keeping the spacing risk tight, because they're looking for that fast breakout, fast move, and then getting pushed out of those positions. But by the end of the day, the idea is right because they circled up in the afternoon. So the adjustment there has had to be starting a little bit lighter, watching a little bit more in the beginning, building in a little bit more as opposed to just taking all your size all at once, being able to be a little bit looser with it, massaging the trade and letting it kind of work out and giving it some space and time. And that still is what worked with Peloton today. Whether or not that has generated more often afternoon breakouts like we saw with Peloton through that 90 cents, I genuinely don't know. that's kind of just been the state of the market and the adjustment that I think that a lot of off the open momentum traders like I used to be more of have had to adjust to over the course of the last couple of years in order to maintain their success. So, hope that helps, Cameron. Yeah, it's something we should pay attention to. The problem with like an afternoon breakout, and I know that Peloton, again, it's got a high short float, and there was some news today. You don't usually see real new momentum come into the market midday like this. Momentum is usually an early day or sometimes a very end of the day phenomenon that is caused by, at least traditionally, the institutions being most active at those times of the day and the liquidity being lighter and the spreads being wider. So you think about the beginning of the day, there's less liquidity, there's a price discovery period, there's a gap that's occurring, there's a wider spread, and that's also the same time as new, not necessarily new, but your institutional players who are moving the most amount of size are executing their positions to get into something new because of news or add to something because of news or the opposite. And that's why you would traditionally see those great big moves early on in the day, especially when there's news. Midday, can you get a midday breakout? Sure, but I would expect that a midday breakout would be more grindy than momentum based. And I don't know, that just kind of isn't ideal, I think, from like a short-term trading perspective, to be totally honest. But yeah, that's the environment. You know, we can't choose the environment. We can't tell the market what to do. The market tells us what to do, and we have to adapt to that. Almost as a trending trade into the close, yeah. From Rex. Question about picking a stock to trade. At 10 a.m. this morning, I was looking to go long on Microsoft or NVIDIA after the market shook out a little bit. But I went for Microsoft instead of NVIDIA. I thought Microsoft daily was a little bit stronger due to the daily chart. All right, let's get up some charts while we're talking. Yeah, Microsoft has been in this big long consolidation, had an inside day yesterday, which means it showed some relative strength. NVIDIA, I wouldn't say is weak as far as the daily chart goes. It's still in the upper right-hand corner. It's still in this kind of bullish consolidation pattern. But over the course of the last several days, NVIDIA was certainly weaker than Microsoft. Microsoft gave an inside day yesterday, whereas NVIDIA broke yesterday's low and closed below the previous day's low. So you went after Microsoft instead of NVIDIA. You thought the Microsoft daily was a little bit better with the inside day yesterday because it had relative strength. Then the Qs upticked back almost to 400, but Microsoft was struggling to move at all. In this situation, what you will put into factor when picking which stock to go for? Well, so basically what you're trying to say is what will you factor in when choosing which stock to go for? Or how would you adjust when the stock is not trading right? For example, the market is trading up and stock is struggling to go up. Sure. So it's a great question. All we can do in the moment is what you did. You know, you can only analyze the information that you have in front of you. You don't have a crystal ball to be able to see the future. So, you know, you're trying to have proper stock selection. You're viewing layers of probability. You're viewing correctly so that Microsoft was relatively strong to NVIDIA yesterday. You got both names on your radar. You decide to go after Microsoft because of that relative strength. And Microsoft was by no means trading poorly this morning either. It just couldn't really go, and at a certain point when the market tried to go, like you're saying, it didn't really move with it. Excuse me. I don't think that there's anything that you can really do to kind of combat that, to be totally honest. You know, the fact of the matter is that while it's a good idea to look for relative strength and relative weakness, and while oftentimes recent relative strength continues to carry through, it's also true that stocks change and adjust. So it doesn't necessarily mean that what was relatively strong yesterday has to be relatively strong today. It just means that what was relatively strong yesterday has probably a higher probability of being relatively strong today. But we know that at the same time, that's something that can adjust and change. So I think that you did everything right with the information that you have in front of you. Um, the second part of your question is when the situation changes. So you made a decision to get involved in Microsoft because of the information that you had in front of you. Now you're in Microsoft and the situation in front of you is changing because the queues are starting to go and Microsoft can't participate, but now NVIDIA is, acting as one of the better ones that's out there. What can you do? Should you be adjusting? Should you be making a change to your thought process? For me, the answer to that is always no. I go back to what I know that you've heard me say in the past, which is buy the ticket, take the ride. I don't think that I or really anyone else that I've met is good enough to make those types of adjustments with the consistency that's going to breed consistent profitability. It's just too hard. You already have the full risk on in the trade. The trade itself could have already failed. Let the game plan of the trade just follow through if you have a position open. Now, it might be different, and I feel like, Rex, correct me if I'm wrong, that you tried Microsoft a couple times intraday and maybe got pushed out and tried to get back into it. If you fully, first of all, that's something that I always think that traders need to be very careful on. I do that sometimes myself, and I really, really, really try not to, which is get stopped out of a position and then kind of rebuy it. I try to be extraordinarily selective if I'm going to do that, because there's a very fine line between taking a new trade in a stock that you already got stopped out of and churning stock in something that's just failing because it upticked 5 cents right after you got out of it and you think that it's still okay. So that's why for me, I generally have moved more and more over time towards wider stops rather than tighter stops, where if my stop is actually getting triggered, I'm so confident that my idea was wrong that I'm not going to be tempted to rebuy it and churn it. It doesn't mean that I actually prefer to trade with tighter stops in an ideal world, but again, this goes back to the market just kind of changing over time and everything that we were talking about earlier, where you don't necessarily get that off the open momentum anymore in the way that you used to, and it becomes difficult to use just tighter momentum stops because you can easily be getting pushed out of trades and pushed out of things that still work. So for me, I used to trade more years ago with the tighter stops, multiple potential re-entries, and at a certain point I just found that I was churning too much, and I've adjusted my trading over the years to be looser and to be wider and to build in and things like that. So that would be the only real piece of feedback that I would give you. If you're already in the trade, buy the ticket, take the ride. If you got stopped out of the trade, then it's an opportunity to reassess all of the factors that you had assessed initially when you got in it. And I do think that if you get stopped out of something, you need to be very careful and very selective about re-entries. So I hope that helps, Rex. And I would go as far as to say that in a lot of cases, it's going to be better to let trades work without you than to rebuy them. That's not 100% the case, but a lot of times it's going to be the case. And at that point, if the trade worked without you, you need to just assess if you did all the right things and you got stopped out anyway, or if you could have had a different game plan like I'm describing that would have been more based on being right versus being wrong, and not gotten stopped out or not been as heavy right away or something like that. Cameron with a follow-up question. Recently, I've been exiting my winners too early. I have been following my trailing rules, but I wanted to ask if you ever adjust your trailing rules if you notice they are not working well. So going back to what I was saying with Rex, when I'm already in the trade, I have a game plan for that trade. I want to follow the game plan. I don't want to make adjustments mid-trade. Adjustments to game plans should be made, honestly, outside of market hours. When you have a clear mind and you're not watching your P&L, and you can be strategizing to see what sort of game plans work best in this given market environment that can maximize your risk reward and probability of success on the way that you're trading, and really maximize your reward, which is the goal of a trailing stop. So that'd be the first thing that I would say. I don't love really tight trailing stops. I've got rules for trailing stops, and those rules are found within the, I think it's the risk reward probability class that I have in my training program classes, which I think is one of the best classes that I have. So I always encourage people to re-review that class and learn what my trailing rules and why they are that way. But those trailing rules can be applied on multiple time frames. Doesn't necessarily have to be a 5-minute chart. And as a matter of fact, I don't like at all actually utilizing my trailing rules on a 5-minute chart for 100% of my position. You're begging to get stopped out. It's very rare that you get like a perfect 5-minute uptrend that lasts the entirety of the day. 15-minute trails can a lot of times be better, but you have to keep in mind that the larger the time frame, the more open profit you need to be willing to give back. But that, from a risk reward perspective, potentially means the more reward you could potentially get, because the more that you're willing to give back. And for me, I love more than anything else risking money that I've already made in order to be able to make more. So that's where I really try to maximize my greed. Is I'm already up money in this position. How can I risk as much of this as possible within reason to potentially make more? That's a big focus for me for my own trading. So appreciate the follow-up question there, Cameron. Bill, give me some vol-controlled implied notional flows. Give me some charts here. Sorry for the people on YouTube who can't see this. I'm just taking a second to really kind of look at this. Total notional flow. So we're not where we were in July, that's for sure. So there is more room here for buying, but like you're saying, there is also room on a VIX pickup for selling to come in. So this is kind of more, and I guess this is just on like a 1-year look back. At least this first chart. I haven't looked at your second chart that you're saying. This is more in line with kind of where my thought process has been on a big picture. Why I was saying, at the end of December a lot, like where the market is right now, I don't love the idea of new big picture longs, because if you're looking at this chart, and this is just one thing, but it's a big thing. There's plenty of room for selling to come back into the market. So you got to be careful doing anything, I think, with real size that's big picture here. At the same time, though, we're not as stretched as we've been back in July. So if there is no VIX spike, there is room, I think, for more supportive action to come in, or at least not it to not be a negative. Let me look at your next chart. Vol control exposure. This is also going back to April 23. Yeah, so definitely a bit. I mean, look at that move from the October low to highs, just insane. And at highs there, on the second chart, we were just about where we were in July, actually. Which is interesting. It's definitely a bit stretched. That's already pulled back a bit, though. Room for it to pull back further, but I feel like we're closer to a midpoint at this point after this pullback than we are kind of the extreme upside. But certainly, I think there's room for both sides. Here are the first two places I know of to find vol control exposure. They're both slightly different, and the data only goes back as far back as pictured. I'll say if I can find another source for this type of data. Thanks, Bill. Still don't know how to pronounce Charlie's last name, so I just don't even try to pronounce it to embarrass myself. This is the problem with not to go off on a random tangent, do any of you guys ever have any words that you've read a lot over the years in books or whatever, but you don't use in common speak? And like I don't really have this anymore, but there was definitely times when I was younger where, and I can't even think of anything off the top of my head right now, where it's a word that in my brain I had just always said wrong because of how I had read it, and then you actually hear someone say it. I feel like that's Charlie's last name for me forever, because I don't watch any TV really. I don't really watch him on TV where he's being introduced all the time. So we'll just call him Charlie. But yeah, he had a vault control exposure chart in his most recent note. I did look at that. Yeah, I looked at this also, and I had seen this also because you sent it to me. So thanks, Bill. I had read this, and this is another thing that I was looking at where it's like, yeah, there's obviously been an uptick here, but we're not where we were in July, and that's why I keep thinking it's like, yeah, these levels are a little bit elevated, but not so much that I feel confident in calling for the type of top that we as a team honestly called for at the end of July, when everything at that point across the board seemed like it was getting very heavily exposed. And I think it was in one of the notes. I think this one actually might have been in Pat's note this morning that spoke about hedge fund positioning. That said that hedge fund positioning right now is back to the 97th percentile to the long side on a 1-year look back. But then it also said specifically in the note, like with an asterisk, you should also realize though that this is it's only at 50% on a 10-year look back. So like those are some of the numbers that I'm looking at where it's like, it makes it difficult for me, I think, here and now on January 4th to try to make any really big calls similar to what we were able to make at the end of October or at the end of July. And to be fair, most of the time that's where the market is, right? Most of the time the market is trending. Most of the time you're not in those periods of extreme that can really give you the high probability of success to come in on the other side. So my thought process with where the market is right now, and it's been looking at some of the same data that you're providing to the VTF right now, which I appreciate that you're doing that, is that we're in an environment right now where there are risks to the downside, but there are also actually still risks to the upside. Positioning is in such a way where if the VIX goes up, it could lead to bigger selling and some of that positioning coming off. But it doesn't mean that we're so extreme that it like kind of air quotes has to happen, which is more of what I felt in July and October. So it's like my thought process has just been that given that I don't think that we're at a massive extreme and that the trend is your friend and that trend has still been higher, that's why I've been trying to find, somewhat reluctantly to some degree, to be honest, the pivot low in this uptrend. And taking it from there. And then I feel like, and this is almost what I was even thinking a little bit this morning, and this is why I like the risk reward of looking for that pivot. When I look at like this, Charlie's chart from the note here that we're talking about, or the other one that you just posted that does show the downtick in exposure that we've just had, I think that you have a setup still where a higher low could come into this market that actually leads to new all-time highs for the S&P, breaks the recent high that happened at the end of December, really gives one final bigger push to positioning to get it even more extreme before the actual selling comes in. And that's what I've been kind of looking for, and I like that from a risk-reward perspective. I like that from a risk-reward perspective a lot, even if the probability of success maybe is kind of mediocre on it, if that makes any sense. But yeah, Bill, like always, really appreciate the information that you provide to the team here. It's really good stuff. Tate giving me the VIX, yeah, above 14 here. And the VVIX closed at 87.59, if I'm reading that right. Charlie's note also mentioned $100 could really be a spot where that goes. Oh, Bill, me too. her now I don't even know how to say it. I don't remember which is the way it's actually pronounced, like in the movies, or if it's pronounced in the book. Uh, the lead female character of the Harry Potter books, and I'm just gonna say that instead of embarrassing myself one way or the other. Oh man, too funny, too funny. Uh, Christians from Italy and only learned English very late by reading books. Thanks, Christian. Costco popping after hours. Yeah, Costco up a little bit after hours. Zahora saying it's on better estimated December sales. Hermione. I don't know. I give up. All right, we got a bunch of comments here in the YouTube, so let me check that out. Good to see everybody who's in here. First from Gabriel. Hi, Dio. I tried an Amazon long versus the low of the day at the first 2 minutes. I got stopped out. Yeah, Amazon scared me this morning off that relative weakness off the... We were struggling even to figure out exactly what that news was. We were attributing it in the VTF to TikTok getting involved in their business a little bit. So for me, this morning, I wanted to go after, if I'm looking for a market pivot, I wanted to go after what I felt was the most relatively strong, and it was not going to be Amazon. But let me read the rest of what you're saying. So you went long versus the low of the day from the first 2 minutes. You got stopped out. The 5-minute candle had a tail early in the 1 to 2 minutes. Do you think on a big gap down, one should wait 15 minutes to enter? No, I don't necessarily think that you should wait 15 minutes to enter, but I also think that just using the low of the first 1 or 2 minutes of the day is asking to get shaken out of trades that work. I don't think that that's going to be enough space necessarily. I know that Pat in the past has used a momentum trade in specifically in news names, and Amazon kind of looked like it was a news name, where he looks for the break of the first 2-minute bar and just trades the momentum in whichever way the first 2-minute bar works. That has worked for him in the past, so you can look at that. But yeah, for me, I don't typically buy and use a stop loss that's going to be coming from the low of the day in the first minute or two. Like I said, I think you're just asking to get stopped out. I need to give most of the time a little bit more space. A pre-market low, a daily chart low, a daily chart support low, or start by taking less size and being willing to give a little bit more room. I don't like the idea of waiting 15 minutes though either, because on the really good trades at that point, you could have already missed a really big move by the time 15 minutes is over. For me, I've always found that the best trades I take traditionally are trades where I am entering actually in the first 5 minutes after the market opens. So it is still where I want to enter. It just, the stop loss. It also depends a little bit on the type of trade that you're taking. If you're taking like a daily chart breakout that triggers in the first 2 minutes, then yeah, maybe you are using the low after 2 minutes as your actual stop loss because it just broke out within 2 minutes. But for the most part, with this type of trade and a big gap down like that on news, I think that you're just kind of asking to get stopped out of the position. I entered early because I thought with the tail it might go right away. Do you think it'd be better to wait for the candle to finish? Yeah, same feedback, I guess, as you were kind of asking on the first part of the question. I don't necessarily want to wait for 15 minutes to be up or necessarily wait for a 5-minute candle to close or something like that to enter the position. It's really more a matter of am I using the appropriate stop loss more than anything else. So that's kind of my thought process. Hope that helps. And Kevin G. How do you interpret the jobless number in the pre-market? Continuing claims were negative 26,000. We're off by 26,000 versus expectations. Initial was 17,000 negative from expectations. Huge disparity from forecast. Did it add to your long bias? And they also revised the previous number by a little bit also. I'll be honest, it didn't really change my thought process very much. I was kind of just more trying to interpret the market price action. I find that the jobless claims number or the ADP number, which we saw this morning, tends to be much less significant than the non-farm payrolls number that we'll be seeing tomorrow. But for whatever reason, that ADP I feel like always comes out like the day before. And if you're talking about like weekly jobless numbers, I pay attention to it, but I don't put a lot on it from like a big picture thought process point of view, because I find that it's not nearly as important as like the number that we're going to see tomorrow. I always find that the move on this number is significantly more muted and much more quickly forgotten about than than um, than than like the non-farm payrolls number for a month look back period. So yeah, so I didn't do too much with that, Kevin, to be totally honest. I see you have a follow-up question. You held that position in Peloton for over 3 hours. I held it the entire day. More than the entire day. I started buying it pre-market. How do you balance take profit and re-entry versus holding and possibly being shaken out? Sure. So, Peloton today, see the pre-market action. I was looking at this like 560 area from where it took off, recognizing that the real start of the news move is really down all the way at 540. That's the idea. That's the spot where you know that you're wrong. I wanted to look at this 560 area though as like a potential zone that I didn't think that the stock should go past. I started buying a core position pre-market at like $5.80. I watched it for a little bit. I saw it uptick without me into that 590, which held. I decided that my initial core position wasn't as much size as I wanted. I doubled it right here. After I doubled it, I started layering out bids all the way down to I think as low as $5.61 every 5 cents or so. And all those bids were really big. And the idea behind those bids was that I was going to buy those, and some of those larger bids would add potentially to my overall core position, but some of those stocks, as I'm averaging against me, would be more for scalping, sort of, to bring my average price down than anything else. So what you can see here is that my third fill, which now tripled my position up from my original buy, I dumped a quarter of that super quick for 5 cents profit, another quarter of this buy for 10 cents profit into that uptick. And again, that's just more for cash flow and for kind of working my price in the position while still maintaining more than my real core position for a big move that I want to come back in. As I sold that stock, I immediately bid back out for it to rebuy that stock to again kind of work the position as I'm known to do. I think I got all within the same candle here, a very quick second uptick where I bought 576 and sold 586 again real quick. Then it came down, I bought 576 for a third time. So again, core position, combination of a core position and cash flow stock, book some profit for cash flow, add back that stock for cash flow, book that profit for cash flow, add back that stock for cash flow, still maintaining now the original larger core position. It moves against me. As I mentioned, I got bids out every 5 cents that are decent in size. So 571, 566, 561. We get this quick downtick here. This is now after the market actually opens. We get this quick downtick right off the open, right into that 560 that we were talking about. I got filled as good as $5.61 just because I had those bids layered out, and it was the same deal. A lot of that stock where I'm averaging against me, I'm trying to work the position and work cash flow while holding a larger core position for a bigger move. So you can see here, I'm immediately booking it was the same game plan as what I just said on the pre-market buy that I had at 76 cents. I'm doing the same exact game plan at 71 with my buy at 71 cents, my buy at 66 cents, my buy at 61 cents, where I'm immediately selling like 25% of the position for 5 cents of the buy, like 25% of the position for 5 cents reward, and then like 50% of the position of the new buy for 10 cents reward, and then the other 25% of the position goes back into the overall core position where I'm looking for a little bit of a bigger move. So it's almost hard to tell here, but then I'm selling some for 5 cents up. That's 10 cents up from that buy, but 5 cents up from this buy, so it's like a double sale. Same thing here. This sale here at 76 cents. I'm selling some of what I bought at 66 and some of what I bought at 71. And then I think from there we down ticked, and that's actually when we broke the low that probably shook some people out. But for me, as soon as I'm getting filled on the offer, I'm immediately putting those bids out in the same fashion to take the stock back to work it exactly in the same way. So when we get that down tick again, I'm rebuying 71s, 66s, 61s. We get an uptick, probably all within the same candle. I sell, I rebuy, I sell, and then I get the big move all the way up to 96 cents. I sell. Then these sales here in the low 90s were a little bit larger sales at 92 and 94 that were based on my kind of average price / core position. Now that this pivot low was in, the ADMA caught up to cover risk versus kind of lows there, and then some a little bit more, a very little bit more at 96 cents, because the game plan was basically once I get these core sales here that I just showed you at 92 and 94, the game plan then is to basically sell a much smaller amount of stock every 10 cents up of the core position to be as greedy as I basically possibly can. So I sell the 96, I rebuy that at 86, I rebuy the actual earlier 76 again that we had discussed that I get filled here, which I then once again sell at 86. That's a bigger buy and a bigger sale than what I'm doing at 96 and the buyback at 86. And then nothing is happening here because there's no movement, so I'm not churning it, I'm not doing anything, my stop's at lows, and then finally we break up. So I resell the 96, I sell a little piece of 99, 06, 16, 24, 26, I rebuy the 26 at 16, and then still have that basically now. So if you want to know what the game plan was specifically on how I traded it with my entries, how I held it all day, how I managed to take profit and re-enter and hold without being shaken out. There you go. That was the whole game plan. From Cyril in YouTube. I felt that IWM held a little bit better for the second half of the session. Yeah, but in some ways it did, but it never broke up like the other indices attempted to either. Do I think that relative strength of the IWM might be a signal? I don't interpret it that way. I just think that the IWM was just super dead money today. Like, it didn't sell off as hard in the beginning of the day, but it never gave any appreciable bounce like the SPYs and Qs were able to either. It just basically sat right on support all day. So I wouldn't overread that. Hermione. That's how it's actually said, right? In the movies. Hermione. I think I used to say when I was reading it Hermione or Hermione, but it's actually Hermione. There we go. We figured it out. Thanks for the pronunciation in there, guys. Oh my God, it's too much. Meta incredible chart from last year has a lot of room for the downside. I think it has a lot of room for the upside also. It's a little bit expensive. I mean, it was dead cheap when it was $100. A little bit expensive at $350. All-time highs is up here at $382. Stock is cheaper at $346 now though than it was at $346 in 2021 because I think the float has been reduced from buybacks. So, yeah, we'll see. From Dennis, the nature of pullbacks is also that it's taking longer than people anticipate. Like any trend, it's so easy to be early. Yes, I agree with that. It's also a good time to remember that the biggest players sell you the shares on the way down, less on the way up. Edwin Lefebvre already said that in 1910 or so. Nothing has changed. The original stock market operator, though that was a code name, right, for his real name. Great book. If no one has read Reminiscences of a Stock Operator, highly, highly, highly recommended. And on that note, we'll end our afternoon meeting. So appreciate everybody who participated, both in the VTF and on YouTube, with questions in today's afternoon meeting. I think it was a really good one. Have a great night, everybody. I'll see you all tomorrow.